very good morning. Today we are going to learn a new concept called cash flow statement. Very important for both CA as well as my CMA guys. Both of you can watch the video for the basic understanding of your cash and cash equivalents in say cash flow statement. See, the name says it is a flow of cash. What is flow? Flow means the movement. Movement may be in or out, right? In means cash generated and out means cash utilized. So we can say a cash flow statement gives a picture, I can say a detailed view or analysis of cash generated and cash utilized during a particular period. Generally say 1 year, because we prepare books of accounts for 1 year generally, right? Now what is cash? We all know cash in hand and cash in bank, but what is cash equivalent? Here we should be a bit careful. Cash equivalent means normally the short term investments which can be readily convertible into cash. You can convert them into cash with a short notice, not much of time required, and the conversion may not be the same value, but the value which you get out of the conversion differs insignificant to the original value. Say example, 1,000 rupees investment you can convert into 995, 990, 980. So the difference is insignificant. But 1,000 rupees investment, if you can convert into 500, it is insignificant. Sorry, it is significant. It means that is not a cash equivalent. That goes to a investment, long-term investment. Now coming back, why cash flow statement? Because at the end of the day I want to know what is my opening cash and what is my closing cash and what contributes towards the difference opening and closing, right? Say example, 1 lakh opening, 2 lakhs closing cash. It means during the period the cash generated as 1 lakh, yeah, net cash after all the receipts and payments, net cash added is 1 lakh. Now is it 1 lakh? How that 1 lakh came? How much actually earned and how much actually spent, and what exactly the purpose for which the cash was spent. All these things, it can be easily identified by preparing a cash flow statement. Right. Now, how typically cash flow statement looks? It looks very simple, though you have to do a detailed presentation, but the logic is simple. You need to identify 3 different activities for which you are spending or from which you are receiving the cash. The first and foremost activity is operating cash flow. What is operating cash flow? Cash flow from your principal activities. What is principal activity generally? For a trading company or for a manufacturing company which actually sells goods, the principal activity of cash generation is sales, right? And for a CF firm or for a services firm, the principal activity is providing services. So what is the cash generated from your principal activity and what is the cash utilized on your principal activity? To make a sale, you should purchase, should incur some wages, you should incur some expenditure, right? So the principal activity here is sale or service, that is for generating cash. And what are all the expenditure you incurred, how much cash you spent to make your principal activity is called cash utilized. So that is your base cash flow, and this should be strong. Cash flow should be more from this activity because this activity is what your bread and butter, right? Now go to investing activity. What is investing activity? We all know investing means what? Investment, right? Somewhere we invest in fixed assets. Unless you invest in fixed assets, business won't run. So you invest in fixed assets, you invest in shares and debentures of other companies to earn some dividend or to earn some interest. The surplus cash, when you buy a fixed asset, that is for your operations. But when you buy some investments, that's for earning additional source of income. isn't it, on your idle funds. So investment activity, right? That is when you purchase, it's an outflow, and when you sell your investments, it is an inflow, right? Now coming to the third activity, financing activity, crucial activity, right? Any business needs finance, either from owners or from lenders. We have two, equity and loan. I can issue equity shares, then I'll get money into my business. This is a financing activity, cash inflow, right? I can borrow loan, financing activity, cash coming in. I'll repay my loan, again it's a financing activity, whereas I'm making a payment, cash is going out. So I can broadly classify the activities in a very simple manner, operating primary business activities. All primary business activities are called operating activities. Investing activities, the activities where you buy your long-term assets or you buy long-term investments, long-term assets to use in your business and long-term investments to earn some money, which is called non-operating income, is called investing activity. And the third one, financing activity, which is very, very crucial because you need finance to run the business, right? Either by way of issuing equity shares, by way of issuing preference shares, by way of issuing debentures, or borrowing from the banks, term loans, or borrowing from the public in terms of public deposits. All these comes under financing activity. So all the three activities we are giving a detailed analysis of how much cash generated from operating or utilized in operating, how much cash generated from investing, utilized in investing, and how much cash generated from financing, utilized in financing. All the three put together, net cash either generated or utilized during a particular period, right? And with this net cash generated or utilized during the period, if you add opening cash, you will automatically get your closing cash balance. This is the introduction about your cash flow statement. Thank you.